Welcome back to the Brent Bruce Daily. Today is December the 5th, 2022. It is now 3:34 p.m. Central Time. We don't have any big reports that came out today or really much that is expected this week. So we're going to look to the technical indicators to see what we believe is going to happen for the next few days leading up to the Federal Reserve's announcement of the next federal funds rate increase, which right now we do believe is going to be 0.5% and what we want. But the employment numbers that came in at the end of the week sort of are leaning to giving the Fed maybe an option to go back to that 75 basis point or 0.75% increase to the federal funds rate. So that's what we'll be watching in the future here. But let's take a look at the charts for what's going on right now. Okay, so we are down 64 basis points on our mortgage-backed security. We're up 9 on the 10-year Treasury. Neither one of those are good things. Why is that? Well, first of all, look at the technicals. We have had a great run for quite a while, right? I mean, that is when we have upward movement on this chart, that means that home loan interest rates are going down. So we've had a great run. And as I've said before, oftentimes you need to have a little bit of a rest. And I think that's what we're going to experience maybe this week is a rest, a pause, taking a breath, getting ready for the Federal Reserve's announcement. Then we go into the holidays, and then we start going back in January to seeing the improvements again. But this is what we have going on right now on our technicals. Right now, we are sitting right on this floor of support, which is the 100-day moving average. Look at how it's just resting here. Not breaking through, but just resting on that 100-day moving average. The 10-year Treasury, sort of the same thing. Let's look at the chart for the 10-year Treasury. And essentially, you will see that we had great, again, the 10-year Treasury, we want to actually go down on this chart, which is what we've been having for a while here. And now we're starting to see it kind of get close to the 100-day moving average, bouncing back up to this Fibonacci level and kind of dancing around right now. We had our home loan interest rates last week down to 5.99% with 0 points on the Brent Bruce Daily. Where are we right now as the markets appear to be taking a breath? 6.375. Guys, so that is almost 0.5% higher. So if we were at 5.875 and now we're at 6.375, that's 0.5% in interest rate higher than it was Thursday, Friday of last week. Why is that? Because again, we're taking a breath. We're kind of seeing what's going on. The banks are saying, all right, we really had this charge down, touched the fives. Let's pull back up a little bit because I've shown over and over again that these things don't go down in a straight line. They go down and take a breath, maybe bounce a little bit down, maybe down a little bit. And we believe that we are going to do this if we were to actually create an average, but we are going to see those bumps up and down as we go down. And that's probably where we are right now, with 6.375 being our Brent Bruce daily interest rate. That's with a little bit of a credit of 2.19. If we wanted to spend some money to buy a little bit lower interest rate, for about a point, almost a point, we're back to that 5.99. But that is a big difference from where we were at the end of last week. Let's take a look and see where we are on our FHA loans. FHA pricing, let's go to scenarios. We will pull up our FHA scenario here. And we are at 5.625. So once again, we're in the mid fives on our FHA. This is probably going to be the same for VA and USDA. So if you live in a market that USDA is an option, which usually has to be more rural, like for instance, my Tennessee watchers or Midwest, all of that, the USDA product is a zero down home loan for those that do qualify. There's certain guidelines that they're getting for 5.625 with no points. That is a huge benefit right now. And again, even having our conventional conforming loans at 6.375 is sure a lot better than the 7.25 that it was, a month ago, maybe 45 days ago. So that is what we have going on right now. We are going to wait to see what news comes out that might push us one way or the other, if not just leading up to the federal funds or the federal funds rate announcement from the Federal Reserve that I believe is on December the 14th. I'll keep you posted on anything else that is happening this week. I'll see you again tomorrow. Let me know, comments, thoughts. Make sure that you like, subscribe, and share, and I'll talk to you later.